Brent is now negative. Let's now bring in the professor at the Wharton School. He's Jeremy Siegel, also Wisdom Tree's chief economist. Welcome back. It's nice to have you.
Good to see you, Scott.
This is everything, obviously, right?
Yeah, I mean, the war is it. And that news about the Pakistani deal came out about 20 minutes ago. We had a 250-point rally on the Dow. I see four scenarios. I'll give them to you from best to worst. The best, of course, is in the next 3.5 hours, Trump tweets, "We got a deal." You got a 1,000-point rally, and by the way, if it's a good deal, you're going to get all-time highs in this market through spring and summer. Second scenario is just what we've heard. Comes 8 o'clock, we got good negotiations, promisingly enough that I'm going to delay. Then you get what's called the relief rally, and in fact, we could have just had a little bit of that now, a couple hundred points, and hope springs eternal if that negotiations are going well. Third and fourth, the bombing starts, and you're going to see a big drop, I think, on that bombing if it does start at 8. But the response of Iran is going to be very important about where the market goes. If it's a weak military response, that anti-ballistic missiles are able to take down most of them, and it is not very, effective at hitting its targets, I think the market's going to creep back pretty strongly because that really shows that the U.S. Has the upper hand. If, and this is the worst scenario, if they have rockets that does damage significantly the oil infrastructure of the UAE and other Arab countries, then we got a lot more downside into the market. So
yeah, I don't think anybody.
It can be anywhere. It could be anywhere in between, and all those scenarios are probably going to be playing out in the next few hours.
Yeah, I don't think anybody would disagree with your sort of worst case scenarios should they come to pass. The hope, of course, is that they won't. Are you trying to allow yourself more and more to hang on to the idea? One may be a stretch, right? A firm deal, and then we race to these new highs immediately. But at least to point number two, a deal to delay or do whatever to avoid the worst case scenarios that you laid forward, and that in and of itself is going to be good enough for the time being.
Yeah, I mean, you could call it taco. It's not really a chicken. Now, if there really is progress, I mean, it did seem that there was some slight alteration of Iran's original demands, and Pakistan saying open that to being a neutral position in between, saying to Iran, that was hopeful. I mean, it was 250 points hopeful for the market. So, if that seems to be moving the chess pieces forward, you're going to get a relief rally, and see, what happens. So, I mean, right now, if I were to ask what is the most likely, it's probably that second scenario to play out. But we have to be prepared for anything. I mean, this is a very important geopolitical moment coming up. Now, in any case, even let's talk about in the best case scenario, we do get a deal. Oil is not going to come down all the way back to 60 right away. There was damage. There is going to be still some risk premium in the market. But I think more importantly is we're going to have to build up our defense forces. I mean, I think Trump already has a $200 billion request in. It's going to go higher. Fiscal expansion. I don't think we're going to see the 10-year drop below 4. And in that case, I don't see the Fed dropping rates. As you know, I was quite forward in advocating that early on. But given these developments, and also given developments where I see bank credit increasing and inflationary pressures increasing, I think we have to put on hold any cuts. I think it's going to be neutral for a while at best.